Hi people, so welcome once again. Today I'll be taking you through an explanation or maybe a presentation on how unit trust products performed in the year 2021. That is just a brief summary of how the various categories of unit trust products performed, but I'll focus majorly on how the money market funds in Kenya performed. I'll look at the different companies and their yields for the year 2021. I'll look at the best performing money market funds and also the market capitalization for the various companies. So I'll start by explaining to you what we mean by unit trust funds or unit trust products. So unit trust funds are collective investment schemes that pool funds from different investors and are managed by professional fund managers. So you find that we have different investors who now invest under a specified unit trust scheme, like the one for Britam, maybe Saito or Nabo. So that is a scheme that brings together various investors who put in different amounts to be managed by now the fund manager for them to make a gain on the pooled funds. Then they'll pay back the money, or maybe whenever you need your money you can just log in, you withdraw whatever amount you want, plus your money keeps earning some kind of interest based on, or maybe dividend based on where exactly the money has been invested. So the fund managers then invest the pooled funds in a portfolio of securities with the aim of generating returns to meet the specific objectives. Okay, maybe the objective might be to make profits so that they can pay interest, or maybe earn some good returns which can be used to pay dividends at the end of the year. Or if you are earning maybe rent or whatever from whatever investment that you've invested the money into, there might be a capital appreciation or capital gain on the units that have been invested in that fund. So it depends with the kind of underlying asset that money is now being invested into. So unit trust funds earn returns in the form of, okay, we have three main form of returns that you might be able to benefit from your unit trust investment. The first one you might earn in terms of dividends. So this one comes in for rates, mainly those people who invest in real estate investment trust, like the one for Akon Holdings through their Kwetu student residences, where now we have that VUCA product, where once you join and you become a member, you can be buying units, and at the end of the year they pay you a dividend based on how the fund performed. Plus there is what we call capital gains, because those units also do appreciate in value over time, because with the real estate you find that we have capital appreciation when we move from one year to the other. Your capital now grows, so you might either benefit from the dividends that you earn on your units, or you get a capital appreciation or capital gain on your investment. And the other one, you might earn interest income. For interest income, this one normally works for money market funds or maybe equity or the other one, but mainly for money market funds, that's where you earn interest on your savings, because the money is invested in fixed income bearing securities, where now once the fund manager has earned those profits, they then pay you back in terms of interest on your savings. So whatever you earn, either the dividends, the capital gain, or maybe the interest, it's dependent on the underlying asset. And for the underlying asset, we look at things like real estate, we have the treasury bills and whatever. So if it's the money is being invested in treasury bills or bonds, then definitely you'll be earning interest on your savings. This is mainly in money market funds. But if your money is now being invested into real estate, then you'll benefit from either dividends or the capital gain. So the underlying asset is the one which determines what you'll be earning based on which investment scheme you've decided to invest into. So we are going to look at the overview of how the various money market funds or maybe the unit trust products performed in the year 2021. So based on a report from the Capital Markets Authority, unit trust assets under management have been growing steadily from the year 2017. So currently, as at the end of December 2021, the total assets under management in all unit trust funds total up to 134.7 billion Kenya shillings. So this is a huge growth from where they were back in the year 2017. And we have 29 approved collective investment schemes in Kenya, but out of the 29 we only have 19 which are active. The other 10 are dormant, so we won't be focusing much on the dormant ones. We'll just look at the 19 active ones. Which are they, how are they performing, and what is the total assets and under management for the various investment schemes. So the other thing I want us to look at is a comparison, because when you are an investor, you might decide either let me put my money into this unit trust investment schemes, or maybe I just put my money in a fixed deposit account or a savings account at the bank, or maybe you decide to go into real estate or any other investment option. So what is that thing that will make you decide now, let me invest my money into this unit trust funds so that I can be able to benefit from either the interest or maybe the capital gains or the dividends that people earn in these funds. So we are going to do a comparison between how much you'll be able to earn if you put your money into a fixed deposit account, let's say a 3-month lock savings account. We also look at the 91-day treasury bill, and now we do comparison with that one with what you'll be able to earn on a unit trust funds, and maybe we do a comparison using the money market funds. So you find that for money market funds, the average yield, if we go with the figures for the year 2021, was at 8.8% per annum. So that is the average across all the various money market funds that we have here in Kenya. So the average came to 8.8% for the year 2021. If we look at a 3-month bank placement or a bank deposit, the average you can get is like 6.5% per annum, and all these returns are per annum. So for a bank deposit or bank placement, that one will give you only 6.5% per annum. And if you look at a 91-day T-bill, treasury bill, it will give you at an average of 7.3% per annum. And when you are deciding on which option will give you better returns, you also have to consider or factor in the inflation rate. And currently the inflation rate is at 6.5%. So if you put your money in a fixed deposit at the bank, you'll earn the 6.5%, and yet the inflation rate stands at 6.5%. So it's like you are earning nothing. Your money has just stagnated. You are not benefiting from your savings. If you go for money market, you'll be earning at an average of 8.8%. So at least there is a positive. If you look at the 8.8% vis-a-vis the 6.5% of the inflation rate. So at least that when you are making a positive gain on your investment. The one for a T-bill, it's at 7.3%. So if you compare the 7.3% for T-bills and the 8.8% on money market funds, so it's advisable you at least go for the money market funds, because you'll be making better returns on that one. Now I'll go to the types of unit trust funds that we have in the country. We have 5 main categories of unit trust products that you can invest into. The first, and which is the most commonly known, is the money market funds. The second one, we have the equity funds. The third one, we have the balance fund. Fourth, we have the fixed income funds. And the last one, we have sector specific funds. So I'll try to explain each as we move on. So I'll start with the money market funds. This for money market funds, these are funds that invest in fixed income securities such as fixed deposits, treasury bills and bonds, and commercial paper. Based on the regulation from the Capital Markets Authority, they specify exactly where fund managers can reinvest your money when you put your money into any money market fund. So those are the main areas that they can reinvest your money: the T-bills, commercial paper, and maybe the government bonds. The key features of money markets is that they are very liquid. Whenever you need your money, you can just log in and you'll be able to access your money. You can either withdraw to your M-Pesa or to your bank account at any time, so they are very liquid. They also offer stable incomes because fund managers invest your money into fixed income securities like the T-bills and government bonds, so they offer a stable return. And the last one is they are suitable for those people who are very risk averse. They don't want to gamble with their money, so they want an investment vehicle that will guarantee them that their principal will be intact, but at the same time making some earnings on their investment. So that those are the key features of money market funds. So I'll go to the second one, which is the equity fund. With equity funds, these are funds that largely invest in listed securities, and they seek to offer superior returns over the medium to long term. So they are good for people who are looking at investing medium to long term, not short term. Short term like 3 months, then I'll advise you go for money market funds. But if you are looking at the medium to long term, then equity fund will be the best. And you hear that they are investing in stocks which are listed at the stock exchange. So for you to be able to actualize some good earnings from this one, then it will take a bit of time for you to benefit from those the growth in, or maybe the changes in the stock prices. So this is good for people who are looking at the medium and to long term. They do this by maximizing capital gains and also dividend income, because with stocks, what you benefit from stocks is you get dividends at the end of the year, plus some stocks do appreciate in value over time, so you benefit from the capital gains and the dividend that you earn at the end of the year. So for those ones, you are not after interest, you're only after the dividends and the appreciation of your units. We'll go to the third one, the balance fund. Balance fund, as the name suggests, it's a mixture of both the equity fund and the money market fund. It has characteristics of both, because part of your money is put into listed securities at the Nairobi Stock Exchange, and the other amount is invested in securities similar to those ones for money market funds. Those are the treasury bills, the government bonds, and commercial paper. So it's a mixture of the two. They offer investors long-term growth as well as reasonable levels of stability in income, because it's a mixture of the two. That bit which is invested in securities similar to those ones of money market funds, they offer you an income which is stable based on the fixed income securities that the fund managers invest your money into, and they also offer you growth, because part of your money is invested in stocks of listed companies. So when the stocks appreciate or gain in value, your investment gains too. And the fourth one, we look at the fixed income funds. These are funds which invest in interest-bearing securities such as treasury bills, treasury bonds, we have preference shares, we have corporate bonds, and loan stocks. So that is about the fixed income funds. And the last one, we have the sector-specific funds. Based on how, if you just get how the name explains, the sector-specific, meaning you choose on a specific sector that money will be invested into. So these are funds that invest in primarily in a particular sector or industry. It might be either real estate. These funds provide a greater measure of diversification within a given sector. They are specifically approved by the Capital Markets Authority as they are not invested as per the set rules and regulations. So any fund manager who wants to offer the sector specific funds, they first of all have to seek approval of the Capital Markets Authority. They have to explain to the Capital Markets Authority why they need to raise those funds and what is the main purpose of those funds. So these kind of funds do not abide by the normal rules and regulations that govern the other unit trust products, because it's an argument between the Capital Markets Authority and the fund manager. So once the fund managers presented their proposal to the Capital Markets Authority, then the Capital Markets Authority will come up with a guideline to govern such kind of a fund. A good example of such a fund is the Saiton High Yield Fund, which invests in real estate. So it's a collective investment scheme, but then the funds that are raised are channeled to their real estate project. So those ones have their own guidelines, and you have to notify CMA for them to come up with a guide on how to go about managing such kind of funds. So that is all about the sector specific funds. So those are the five main categories of the unit trust funds that we have here in Kenya. You can choose on any based on what you want to benefit from your investment. Either you want the interest, you want capital appreciation, or you want a stable income. So based on your main objective, then you will be guided on which one you will put your money into. Okay, when I started, I said the unit trust funds have shown a steady growth since the year 2017 to date. So what is this that has made the unit trust funds to keep growing in value? So there are five main traits that have led to this steady growth. So the first one is the low initial investment amount that are required for you to start investing in these funds, because you find there are funds which you can invest in starting with a minimum amount of like 100 shillings. Others go all the way up to around 10,000. So on average, majority of the funds offer you a chance to invest in their schemes between a minimum amount of like 100 shillings to all the way to the 10,000. So you find this one, it's quite reasonable for any individual or retail investor. So it's quite accessible to many people. That's why it has made so many people to be interested in investing this in unit trust funds, because when you are able to raise the 100 shillings, then you'll be thinking of, okay, let me start investing small and I keep growing my investment. So that initial amount, the very low initial amount, is now the one which has motivated so many people to give it a try. The second thing that has led to the steady growth in the unit trust funds is what we say the increased investor knowledge, because you find that many of these fund managers have been sharing information with potential investors. Some of the companies offer trainings, wealth management trainings, like what Saiton normally does. We have Gengis and the other fund managers who normally have sessions where they train people on how to go about investing their money in these unit trust products. So this knowledge has been out there, and the companies are aggressively marketing their product. So this knowledge has made people to have a deep understanding of what is meant by investing in the unit trust products. And once people are informed about the benefits of this product, then they feel like they can trust that product, and thus leading to many people coming in to invest in these products. So that is the other reason that has led to the steady growth of the unit trust funds. The third one, we have the diversified product offering under the unit trust funds, because I told you your money can be invested in either through the money market funds or maybe things like the real estate investment trust. So we have a variety of areas your money can be invested into. So, and once we have a variety or maybe a diversification of the securities that your money can be invested into, then at least you benefit from the various gains that you can earn from the different underlying assets. Like if you do real estate, you understand about the high returns from the real estate sector. If you are doing money market, you can benefit from the good returns that are offered on things like government bonds. Like currently, the one that was issued recently, the government bond was earning at a rate of 13.9% per annum. So if you have a mix of both, you find that at least you diversified your portfolio and you are making some good returns. So the diversification is what has attracted so many potential investors to now decide to invest into these unit trust funds. The fourth one, we have the efficiency and ease of access and also the high liquidity that is associated with unit trust products, because you find that with many unit trust products, you can sell your units at any time and be able to get your money. If you are withdrawing via, let's say, M-Pesa, you end up getting your money instantly for majority of the funds. But if you choose to withdraw through your bank account, maybe that one will take between 3 to 5 working days for you to receive your money in your bank account. So this access to, as in the ease at which you can access your funds, has also made so many people to buy into these products and gain that kind of confidence in them, because whenever you have an emergency, your money is just a click away. So that one makes people to be attracted to such kind of investment. And the last point is the adoption of fintech, or we can say digitization or automation of these funds. Most of these investment schemes, the fund managers have gone to great length of introducing automation to their processes, whereby we have these mobile apps and digital platform whereby you can invest your money at any time and be able to withdraw your money at any time, be able to check your balances. You can transfer funds to other members. We have companies which have such sophisticated platforms whereby you can even set standing orders on your platform, pay bills, and do so many other stuff using your their platforms. Like the one for Cyton, you can pay bills, set standing orders, transfer funds to other members. When you are withdrawing, you receive your money. If it's via M-Pesa, you receive your money instantly. If it's through your bank account, within 3 working days, you have your money. So the digitization or automation of these funds have also attracted many people to such kind of investments, that's leading to the steady growth of the unit trust products. So those are the 5 key things that have contributed to the steady growth of the unit trust product. Now I'll go to comparison. I'll do a comparison of we'll look at first at the assets under management for the various unit trust products offerings in the market and their market share. So I'll do this by looking at money market funds mainly. So as I told you, we have 19 approved investment schemes that are active. The other 10 are approved but they are dormant. So we'll just focus on the 19 that are active. So I've ranked them from the one with the majority of the investors or maybe market capitalization all the way to the one with the least. So at the top you have CIC Unit Trust Scheme. Now with the CIC Unit Trust Scheme, their market share stands at 41.8%. So it's the when we say 41.8% and we have 19 approved schemes, then this is a very huge percentage of the market share. So they are the market leaders when it comes to market share of the unit trust schemes here in Kenya. And their total assets under management for CIC, it's 56 billion Kenya shillings. If you remember, I told you that the total assets under management and in all the unit trust schemes here in Kenya stand at 134.7 billion Kenya shillings. So out of the 134.7, CIC has 56 billion under management. Then the second one, we have NCBA unit trust scheme. Their market share stands at 13.4. So you can see the difference between that market share of CIC and this one of NCBA, because the one for CIC stands at 41.8. The second one, NCBA, stands at 13.4. So you can see that huge gap. So CIC is doing quite good when it comes to these unit trust products. They are the market leader here in Kenya, looking at both their market share and the total assets under management. The total assets under management for NCBA stands at 18 billion shillings. The one for CIC stood at 56 billion. So it's a very wide gap. The third company or maybe investment scheme, we have Britam Unit Trust Scheme, which comes in third. Their market share is at 10.8. Total assets under management stands at 14.5 billion. The fourth one, we have ICA Lion Unit Trust Scheme. Their total market share is at 9.9%. Assets under management stands at 13.3 billion Kenya shillings. The fifth one, we have Sanlam Unit Trust Scheme with a market share of 6.4%. Total assets under management 8.6 billion. The sixth one, we have Old Mutual Unit Trust Scheme, market share at 4.9%. Total assets under management at 6.6 billion. Seventh, we have Dry Associates Unit Trust Scheme, market share at 2.3%. Total assets under management at 3 billion. Number 8, we have COP Unit Trust Scheme, the one for Cooperative Bank, market share at 2.1%. Total assets under management at 2.8 billion. Number 9, we have Madison Asset Unit Trust Scheme, market share at 2%. Assets under management at 2.6 billion Kenya shillings. Nabo Capital, the one for Center, total market share at 1.8%. Total assets under management at 2.4 billion. Number 11, we have Zimere Unit Trust Scheme, market share at 1.5%. Total assets under management of 2 billion. Number 12, we have African Alliance Kenya, that is AAK or AA Kenya, market share at 1.3%. Total assets under management 1.8 billion. Then we have Apollo Unit Trust Scheme, market share at 0.5% with total assets under management at 716 million. Then we have Citron Unit Trust coming in at number 14, market share of 0.5%. Total assets under management of 704 million. Then we have number 15, Genghis, market share at 0.4%. Total assets under management of 558 billion. Then number 16, we have Equity Investment Bank, market share of 0.2%. Total assets under management of 246 million. Then we have Alpha Africa unit trust scheme, market share of 0.2%, total assets under management of 245 million, almost tying with equity. Then we have Amana unit trust scheme, market share of almost 0%, with only assets under management of only 30 million Kenya shillings. And the last one we have Wanafunzi. Okay, market share of 0.0 something there. Total assets under management of only 6 million Kenya shillings. So that is the ranking of the 19 unit trust schemes here in Kenya, their market share and the total assets under management. And then we'll come to an analysis of the key points that we get from that analysis of the 19 unit trust schemes, their market share and the total assets under management. Now to do an evaluation of that presentation, you find that from that we find CIC has the largest market share at 41.8%. Total assets under management, CIC is also leading with 56 billion shillings from the 134 total for all the unit trust schemes here in Kenya. So CIC is leading with 56 billion with a market share of 41.8%. In terms of growth, when we look at which unit trust scheme has grown rapidly within that year, we have cooperative unit trust scheme which grew at a rate of 178%, because it grew from 1 billion way back in 2020 to now 2.8 billion at the end of 2021. So in terms of growth, cooperative was the best performing. When we look at the one which declined the most, we have Amana, which recorded a negative or a decline at a rate of 77.3% from the initial 135 million assets under management in the year 2020 to only 30 million at the end of 2021. And this is attributed to when the management at Amana decided to freeze withdrawals for 2 years from the year 2018. So this led to investors losing confidence in that fund, and it led to so many withdrawals, and also there aren't any people who are willing to invest with them, so it's only withdrawals. So right now they are standing at only 30 million. So given another 1 year, they might be at zero. So that is Amana, which is performing very well. And the top 5 money market funds that performed quite well for the year 2021 with the best yield, that is, we have Saiton at the top with annual yield of 10.6%. We have Zimele coming in at number 2 with a yield of 9.9%. Nabo, the one for Centum, came in at number 3 with a yield of 9.9%. At number 4 we have Madison Money Managers, Madison at 9.4%. Number 5 we have Sanlam at 9.3%. So if you do an average of the best 5 performing money market fund managers, they come to an average of 8.8%. So if you are looking at making good returns, then I'll advise you go for any of the top 5, that is Saiton, Zimele, Nabo, Madison or Sanlam. Saiton is at 10.6% per annum. You get for the top 5 an average yield of 8.8%, which is way up compared to the one for treasury bills at 7.3% or a fixed deposit at 6.5%. You also consider inflation rate, which stands at 6.5%. So it's good to invest in any of these unit trust schemes for you to benefit from the good returns. So that's all I had for you for today. Just wanted us to get a clear picture of which one you can decide to invest into. If you are looking at stability, go for CIC, go for NCBA, go for Sanlam. But if you are looking at yield, Saiton is here, Zimele, Nabo, Madison or Sanlam. So that's all I had for you. See you next time. Thank you and God bless.